There will be no compensation costs involved in the latest deferment of the KL-Singapore high-speed rail project agreed upon by Malaysia and Singapore on May 31st, says Senior Minister for the Economy Datuk Seri Azmin Ali. Azmin, who leads the Malaysian team in discussions between the two countries, said the decision to suspend the project for the second time to December 31st was a mutual choice on both sides. Both governments have agreed to resume discussion in the near future. In a separate statement, Singapore's Transport Ministry said it had agreed to a final extension and that it looked forward to receiving Malaysia's formal proposal on changes soon. According to Azmin, each delay in the project will result in a cost increment, taking into account a higher inflation rate and a few other factors. Hence, he says Malaysia is committed to ensuring the construction of the project will start within the newly agreed time frame. To recap, the estimated cost of construction of the HSR project, first announced in 2013, was last quoted to be around 60 billion ringgit, a massive drop from its original 110 billion ringgit price tag. The KL Sessions Court is set to finally deliver its verdict for the 2007 accounting scandal involving Transmile Group founder and former Chief Executive Officer Gan Boon on August 27th, after about 10 years worth of court proceedings since the trial commenced in 2010. The court fixed July 29 for the filing of written submissions from both sides and August 19 for oral clarifications of the submissions. Gan's primary charge is under Section 86B, read together with Section 122C of the Securities Industry Act 1983 for abetting Transmile in making a statement that is misleading in its quarterly report on unaudited consolidated results for FY06. However, he was called for defense for an alternative charge for committing an offence under Section 122B of the same Act when he, as the director of Transmile with intent to deceive, furnished a misleading statement to Bursa Malaysia with regard to the financial statements of the same year. If convicted, he is liable to a fine of up to 1 million and up to 10 years in jail. Once a darling stock, Transmile fell from grace in 2007 after it was revealed that its stellar performance was but a sham due to a massive accounting irregularities. It was categorized as a PN17 company in 2010 and delisted in 2011. Despite a loss-making first quarter, MSM Malaysia aims to turn around this year, helped by the improved efficiency and production capacity of its plant in Johor. Group CEO Datuk Anwar Aziz says the company wants to maximize the potential of its Johor operations, including aggressive product diversification into premix and liquid sugar to meet the industrial demand across Asia. According to Khairil, MSM has a total sugar production capacity of over 2 million tonnes a year. About half of its sugar output is from the Johor plant, which has a utilization rate of 34%. The group aims to raise that to 50% by year end, with Khairil explaining that a higher plant utilization rate will result in lower production costs for the group. To recap, MSM's net loss expanded from 7.06 million in the first quarter of FY19 to 34.71 million in the first quarter of FY20. In FY19 overall, its net loss stood at 299.77 million ringgit, compared with a net profit of 35.66 million in FY18. MRCB Quill Real Estate Investment Trust says net property income for the first quarter inched up by 1.29% to 32.8 million, thanks to higher revenue generated from Menara Shell, Wisma Technip and Tesco. Net profit improved by 1.94% year-on-year to 19.79 million, while revenue climbed 1.19% to 42.22 million ringgit on higher contributions from the said three assets. In its BOS filing, the REIT, which has exposure to both the commercial and retail segments, said it recorded a 0.85% increase in property operating expenses to 9.42 million. Total expenditure, meanwhile, slipped 2.8% to 13.08 million on lower managers and trustees fees, which was a result of lower gross asset value and lower finance costs on lower short-term interest rates. Going forward, MQ REIT noted that 19% of its total net lettable area, about 371,000 square feet, is due for renewal this this year. Of that, 2% of the leases were due in the first quarter and only 93% were renewed. MQ REIT added that as the office market in the Klang Valley is expected to remain challenging, the group will focus on asset management and leasing strategies centered on tenant retention. Construction and property outfit TRC Synergy has bagged 113.99 million ringgit subcontract to build elevated station for MRT2 Sungai Buloh Serdang Putrajaya line. TRC Synergy said in a filing with the Bourse that the contract was awarded to its unit Trans Resources Corp. Barring unforeseen circumstances, the group expects the project to contribute positively to its future earnings and earnings per share. The sizable contract comes after it secured a 118.8 million ringgit project to refurbish Bank Negara Malaysia's Mint in Shah Alam last year. Its shares jumped as high as 38 cent on the news before closing at 36 cent on profit taking, which is still 10.8% higher than its previous day's close.